Ladies and gentlemen, welcome to the second part of Market Indices. My name is Samuel Ngon. Last week, we talked about two indices, the Dow Jones Industrial Average and the Nasdaq. We heard that Nasdaq is an index more volatile than all other indices because it got 100 technology stocks evenly loaded in the triple Q. And the Dow Jones Industrial Average is the most veteran and the most famous in the Wall Street. Today, during the second part of this lesson, we're going to talk about the remaining two indices. You will probably be surprised to hear that there is another important index which all traders watch all day long when they trade, and is a very important one. That index is the Standard & Poor's 500, the SPY or SPY. What is the Standard & Poor's 500? Let's see the chart of the Standard & Poor's 500 on the screen. This is the chart of the Standard & Poor's 500 on the screen, ladies and gentlemen. Here we have the daily chart. One full candle here represents 1 day of trading. Here we have the weekly chart. One full candle here represents 1 week of trade. And here we have our monthly chart. What is the Standard & Poor's 500? The Standard & Poor's 500 index is something that you must have up on your chart all day long. And you must always watch and pay attention to it. Why? Because contrary to the other indices, it takes the 500 largest company in the United States and bunches them together in one index. That index is also tracked by an ETF, as we refer to it as the SPY, the SPY, and it tracks all 500 companies in one index. If you want the market mood, you must look at the SPY. You want the entire mood of the entire market, you look at the SPY. It's the 500 companies that move the market on day-to-day basis. And it gives the direction of the market. But how can we use the S&P 500 when we trade? Generally speaking, when the Standard & Poor's 500 is going up, we want to be buying stocks or long stocks. And when the Standard & Poor's 500 is going down, we want to be short stocks. In the future, we will explain what long and short stocks mean during our courses. This brings me to talk about one extremely important lesson in day trading. There is an old saying on the Wall Street that the trend is your friend, and it could not be more important in day trading. When SPY is going up, we want to be long stock and never want to fight the trend. I will tell you this right now. The only way you will ever lose a lot of money on the trade is when the stock is going down and you keep buying it and buying it and buying it. We call that trying to catch a falling knife. It never works. So, don't ever keep buying or selling a stock in the opposite direction of the trend. Try to find the trend of the overall and be with that trend. Very, very important lesson. The trend is your friend. Don't ever fight the trend. So, how do we follow the S&P 500? We do that with what we call an exchange traded fund, ETF. So, what is an exchange traded fund? It represents the entire group of the stocks. It looks and acts exactly like a stock. And in this case, the symbol of the Standard & Poor's 500 is the SPY. So, rather than trading one or two individual stocks, if we can figure out the overall trend of the market, we can just trade one stock rather than being in 10 different places. they have exchange traded fund for every industry of stocks. And I want to talk about a couple of them because they are important. Let's talk about GLD, which is exchange traded fund for gold. This is GLD on the screen, ladies and gentlemen. This actually tracks the physical price of gold. Rather than picking an individual gold stock, we can just trade the GLD and we will be trading the actual price of gold. There is probably 200 or 300 exchange traded funds that we can pick from that encompass all the different areas of the stock market. One last important index that I want to talk about here is the SVSY. SVSY. This is SVSY chart on the screen, ladies and gentlemen. What SVSY measure is the fear index in the market. So, what does that mean? What it means is when this stock, the SVSY, is going up. That is what we call risk on environment. What that means, ladies and gentlemen, is that nobody is really afraid that this market is going down. When there is a lot of fear in the market, this stock will start coming down. And when there is not a lot of fear on the market, this index will go up, as you can see here. And when there is a lot of fear in the market, this stock will start coming down, as you can notice it here. This big candle. So, this is another very, very important ETF that we keep on our screen all the time because it measures whether people are scared or not that the market will go up or down. This is the SVSY, extremely, extremely important. Let's recap what we heard in this chapter, ladies and gentlemen. In this chapter, we talked about 4 market indices. The first most important one is the Standard & Poor's 500, or the SPY, which takes 500 largest companies in US. The second important one is NASDAQ. NASDAQ is an index which comprises 100 technology stocks heavily loaded in the triple Q. That is why it's more volatile than the other indices. The third important one is the SVSY, or the fear index. And when there is a lot of fear in the market, it will go down. And when there is not a lot of fear in the market, this stock will go up. And the last one is the Dow Jones Industrial Average, which we started with. Even though it's less considered by day traders because the number of the company on it remains the most veterans and foremost index in the Wall Street, the most quoted in the financial media. In conclusion, the indices we just saw are for traders, no less than crystal ball. We must be able to look at these ETFs to formulate our opinion for the entry and exit of our trades. About 90% of the movement begins and ends with the advanced movement of these indices. And it's important to understand that as a trader. Don't forget, the trend is your friend. Don't ever fight the trend. In our next lesson, we will talk about day trading, swing trading, and investment. We invite you, especially those who are new to our channel, to subscribe and share our video with your friend. See you next week for our next lesson. Thank you.